Hi, I'm Devie Mohan. I am the founder and CEO of Burnmark, a fintech research company. At Burnmark, we provide fintech research into banks, startups, and investors, and all parts of the ecosystem. I also spend a lot of time speaking, writing, and teaching at universities in the UK and abroad as a way of evangelizing fintech in the community. I think digital banking has come a long way since 2000, where we saw the early stages of digital banking with apps and internet banking come into the picture. But fintech has really revolutionized this process. What fintech has done is take what digital banking was from the 80s, 90s, and 2000s and given it a fresh view of customer experience that it has lacked before. We are all used to using Google and Uber now, and what banking has transformed into is such a good customer experience that it's like using Google at home. So that's the whole idea of the customer experience angle of digital banking, which fintech has absolutely revolutionized. And it has done so with partnerships, with use cases, working closely with banking, and also as competitors to some banks, where they have actually given lessons to banks in terms of how best to do this. So it's been quite an interesting space to watch out for in the last 10 years or so. I think long-term impact is such an important word in this market now, and especially after COVID years of fintech. We have kind of noticed more of a focus on sustainable solutions rather than solutions that are invested in right away based on keywords or key trends in the market. I genuinely believe that's a good thing to happen, that we're focusing on long-term solutions and sustainable solutions, combining both banking and fintech. Now, how do we do that is a big question. I think it will take a few years to really change and transform the way the processes work today. And the cultural angle is so important in terms of aligning both banks and startups and coming up with a solution that's viable. And I think that's where the focus will be in the next few years. We have the traditional banks with set culture and processes and values, and we have the startups who are more agile but having their own restrictions in terms of regulatory structures and scalability and partnership scalability within them. So how do we then find the positives of banks and their cultural values and startups and their cultural values? The different examples I've seen working well in the world, there are lots of banks who have set up different teams, innovation teams, or have different offices where this kind of cultural alignment can happen, where it's a mixture of both the traditional regulatory angles of traditional banks and the startup agile way of working and the processes of startups. It has worked well with some of the UK banks, as we know, but I think in the last few years the trend has been to not isolate a cultural hub like that, but bring everything inside to the bank itself. So the hiring has changed. The kind of structures in place for new hires have changed. The kind of approach to launching subsidiary banks or subsidiary digital products or even a new go-to-market strategy, the way it's done is changed. I think in the next 10 years, the lines between these cultural values will blur, and I genuinely think that startups and banks will start to look more and more alike in the next few years. I think customer experience has been the strength of fintech, or what they have brought into banks in a big way, and I think that will continue to be the case. When we talk about customer experience, the first thing that comes to our mind probably all the time is apps, or the way we use apps, or the way we use the website. But I think customer experience has now gone beyond just the app and just the website, and even talking of consistency across all touch points. I mean, does the cash machine or does your credit card kind of look and feel the same as your app experience? I mean, do we experience the same thing when we order a checkbook from an app versus a branch versus taking it from a cash machine? So I think all of these consistency across touch points has become a big conversation, but I think it's actually going beyond that. And I genuinely believe AI, and especially Gen AI, will make a big impact on this, because a lot of the conversations now that banks are having with their customers are through generative AI or chatbots, which have always been there, but they're more evolved now. And it's very unlikely that when you get an email back from customer support, you're able to actually figure out without specific checking tools whether it's a human or an AI replying to you. I think that kind of conversation, that's where the customer experience and the future lies. And the kind of conversations you can have with the bank on a real-time basis, the kind of help you get and how quickly do you get it, how do they respond on social media, and are they consistent across all of these touch points and answering the questions in the same way, and actually following up on your previous conversations based on your voice or based on your language. And I think that is where the customer experience will lie in the future. And that improves the engagement side as well. Gamification is a big play in fintech. And a lot of the banks that I personally know are buying or acquiring gaming companies to get acquisition of the gamification platforms. And that's where the engagement is going to come from in terms of offering savings platforms or investing platforms that gamify and make you spend more or engage more with the bank, take more advice, reduce your debt by taking that advice, and actually putting more and more into investment products in a way that works for you. I think gamification is also going to be a big topic in the next few years in terms of obtaining a better engagement from customers. I think regulation and risk will always be part of banking. And if any fintech tries to say, oh, we don't care about regulation or it doesn't apply to us, I would be very worried. I think regulation is a necessary part of scaling up, and it's a necessary part of being active in the mass market. There is a conversation on how it would affect innovation on a day-to-day basis, but I genuinely think you can innovate within the limits of regulation because it actively helps you. What has actually evolved, though, is the way regulators think and behave, and I think that's an absolutely great thing to see. Of course, in the UK we have this wonderful regulator with the FCA who is very open to innovation, and they work very closely with challenger banks, and they have their own sandbox where they play with the data provided by startups on a fairly good scale. We also have very good regulators in Singapore, in the Middle East, and most countries in the Middle East, Bahrain, Qatar, and Abu Dhabi and Dubai markets all have sandboxes. So I think innovation is at the forefront of every regulator's mind, and the sandbox is used as a mechanism of bringing startups into the ecosystem, observing them, taking lessons from them, and actually feeding useful data back into the ecosystem and back to the banks. And that changes the way the market flows because you are now taking lessons and data from the startups and challenger banks themselves. So that is definitely a positive thing. The way risk is calculated, of course, is changing dramatically as well. We now look at risk from an environmental point of view. We look at risk from a social and governance point of view. We look at risk from data using carbon emissions, for example. We look at data on social media to calculate credit risk, for example. So the way risk is calculated in-house has completely changed as well. I think we will start seeing the blurring of lines now between traditional and alternative methods of finance. Solutions will evolve as the need evolves. We saw a lot of very interesting use cases in the last few years, for example, around KYC. I think in KYC, traditionally, what we do is paper-based KYC. We fill up forms. We actually use our salary data or financial data to actually get a loan. But as we saw in COVID, paper forms were no longer possible. It was not possible to use cash as much as we used to in the past. So necessity being the mother of invention, I mean, we saw a lot of eKYC evolve using biometric KYC. A lot of the banks very quickly rolled out new tools to provide loans and to calculate credit risk and to do KYC in-house. There's a very interesting story of Challenger Bank that launched in Asia, and what they did was launch a virtual bank but do the KYC across a chain of cafes. And the reason was that the bank closed at 5 p.m. and not many people were able to come in during working hours to open a new bank account. account. But having the KYC being done by cafe employees, by bringing in your photo ID, they were able to extend the hours to 10 o'clock or 11 o'clock and do that on weekends as well. So the whole idea that KYC has to be done in a bank branch or a post office on paper have completely changed, and new solutions will emerge based on that. And blockchain and cryptocurrency is another great example. The need for decentralized solutions came about in the 2000s as a means of reducing the inefficiencies of the current monetary system. So I think solutions will evolve, and as I said, the focus is very much now on generative AI and customer experience and engagement around that, and gamification platforms being used, and also bringing all of the multimodal systems into one platform. I think that's where the solutions are now focusing on. I think there are three ways in which banks will look at those solutions or startups. So one is outright acquisition, which is very common but not that common anymore. The second is, like I said, we have a different innovation team or a hub working very, very closely with those startups but not actually bringing them in-house fully. And thirdly is when they engage with startups as an investor or as a board member or sometimes as a mentor in accelerator programs, but they don't necessarily acquire them into the bank. I think in all these three methods, the focus and the objectives are slightly different. But in terms of an actual acquisition, it's quite difficult because, like we discussed before, the cultural value alignment is a big problem still. There's a lot of conversation in banks about incentivizing acquisition of startups and using the solutions on a long-term basis. But if you look at the past acquisitions of startups into banks in the last 10 years or so, the story isn't great, to be honest. I think there are still a lot of issues in terms of the processes not being very relevant to the bank once they're acquired. Sometimes there's an acqui-hire system where you hire for the people and then the entire process and regulatory structure is built from scratch once they come into the bank. So there are different ways in which banks are trying these acquisitions out, but to be honest, they're not a popular method of working with startups. I see more focus on working with startups in the second and third ways, which is as an innovation hub or through another third-party innovation hub or as a mentor or as an investor. And there's a lot of investment that's going into startups from banks, and I think that's actually going to be where the big money is in the next few years.